Hello and welcome to the latest Retail Systems video interview. I'm editor Michelle Stevens and today I'm talking to Nathan Gill, the VP of Commerce Enablement and Global Innovation at Verifone, about retail payments. Nathan, thank you for joining us today.
Thank you, Michelle.
So how are payment behaviours changing among consumers?
I think what we're seeing right now is probably the fastest pace of change, specifically in the payments industry, than probably in the last decade. I think there's the confluence of new consumer technologies specifically tied to mobile devices and the applications that enable new experiences, and a lot of change being enforced by some of the regulatory bodies in Europe that have created an environment that is going to see the next 2 years some dramatic changes. Specifically on the consumer front, I think that consumers are now becoming accustomed to the digital experiences that they get online and mobile, with increasingly e-commerce experiences being mobile first. The friction has been taken away from the shopping experience online. Consumers are able to easily 24/7 browse any product that they may want, always ensure that they have their right size available and have it delivered to their door, in some cases that very same day. So the demand and the expectation among digital consumers has increased dramatically. And I think that the expectation when they walk into physical retail has now changed. We've seen some innovation there with the advent of NFC. For the first time, we enabled things like contactless, which here in the UK has actually grown very rapidly. I think the recent data shows that about 32% of all card transactions are contactless. That has also allowed mobile devices to now begin to communicate with payment devices through things like Apple Pay and Android Pay. So a lot of the mobile wallets have been able to take advantage of this consumer technology embedded in mobile devices. But it's only the start. I think when you walk in and you see consumers in physical retail environments, you still see queues of people waiting to pay, which never happens in the digital world. You still see people digging for plastic loyalty cards among the 5 or 6 that they may be carrying in their wallet or handbag, which again doesn't tend to happen online. Sizes are still not available, which generally wouldn't happen online. And delivery options are far fewer in the physical environment than they tend to be in the digital environment. So I think there's still a big divide, and expectations are high. And I think that's going to be something that merchants are really going to have to contend with in the next couple of years, ensuring that physical environment is similar and along the same lines to what you're seeing in the digital environment. I think the one good piece of news, though, is if you look at Black Friday in 2017, mobile shopping increased 24%, which is astounding. It shows that experience is paying off, and increasingly consumers are going to their mobile devices, but it's not necessarily leading to the declines that many people expected in physical retail. Again, year over year, Black Friday 2017 to 2016 only saw a 1% decrease in physical traffic. So the good news is that consumers still want to touch and feel the products that they're purchasing, but their expectations around the experience are starting to change.
And how are those changes in consumer behaviours impacting merchants?
Well, I think merchants are aware of them, certainly. There's a big difference, though, between being aware of them and actually being able to change. In the digital world, you can change a few lines of code, and very quickly you've enhanced the consumer experience. Physical retail is not quite that simple. I think we see the reactions vary based on the type of merchant. The large merchants, those are the ones that have the biggest budgets. They can pay the consultants and outsource some of their technology, and so they have the means to actually change. However, they also have a lot of friction. Their IT departments are paid to ensure security and uptime. And anytime you look to change the consumer experience in store with technology, which is often trying to be driven by the marketing teams, there is the internal conflict between the IT teams that don't want to change and the marketing teams that want to create these new experiences. So ultimately what happens is it really slows down innovation in store versus online for the big guys, but they'll be okay, and eventually they can kind of pay their way into innovation. I think the real challenge is for the small guys, because they don't have the ability to have lots of folks on staff tracking consumer trends. They don't have large budgets to be able to update their technology and their systems. And for them, they're spending a lot of their time not only dealing with customers and creating a really great customer experience, but they're also paying bills, managing employees, and so their time to do a lot of this stuff is really reduced. And you know, at Verifone, what we're trying to do is help solve that for large merchants as well as small merchants. For the large guys, we're trying to utilize the existing payment infrastructure that they have in place and use that to deliver new services so that the disruption to their IT teams is much less. And for the small guys, they may not have had the same level of IT infrastructure in place, and so we're trying to create new devices for these small merchants that allow them to do all the things that consumers expect when they walk in, as well as a lot of things that will help them manage their business through better all-in-one devices like our Carbon unit, which for the first time takes a point-of-sale, merchant-facing tablet with a consumer-facing payment device integrated into one solution that really helps them manage their whole business. And you know, we're trying to do all of this in a pretty open way. So I talked about some of those challenges, the digital divide and the expectations that consumers have when they go into a physical store. We've effectively opened up our platform to allow lots of value-added service providers to be able to develop applications that help small and large merchants solve those problems. So I talked about loyalty cards, for example. We've got application partners, a company called Stamp that has developed an application that allows you to insert your card, enroll that card into the loyalty program, and never have to carry a plastic card around. So we've effectively digitized the loyalty experience. We've got a company called Payment Loyalty that has created a fantastic application for restaurants that you know tend to be smaller and have a tough time implementing loyalty programs. But they've got an app that actually gamifies the payment process, which is really a lot of fun. When you insert your card into a payment terminal, it asks you if you want to play a game to win something. And they've got lots of different games that you can play. Spin to win, which is kind of a Wheel of Fortune type wheel. You can pick a card. And the idea is that the consumer always wins. They generally win something, but they just need to come back and redeem it within a certain period of time. And so restaurants that on average get visits every 5 to 6 times per year, by having a gamified payment process can improve loyalty among customers, get them to come back sooner, and as long as they use that same payment card, they automatically redeem their prize. Those are just 2 examples, but we see a lot of our partners developing things that are helping merchants with loyalty, with customer analytics, with new ways to pay, a wide variety of innovation that we're really just allowing to occur on our platform, which is helping merchants at the end of the day.
And in terms of mobile payments, why do you think these have not grown faster?
Yeah, I think you know a lot of people talk about that, and I think it really depends on the market, quite frankly. I think there are examples of markets where mobile payments have actually really grown at a very fast pace. One would be in the Nordic region. There you have a consumer that is much more accustomed to trying new things. The card rate is very, very high. Cash is pretty much non-existent, and you know it's a pretty organized group in terms of the banks in the Nordics, and they've gotten together and they've supported a new payment method called mobile pay. And within a very short period of time, mobile pay is now in the Nordics the 3rd most downloaded application of all applications. It's Facebook is number 1, Messenger is number 2, mobile pay is number 3. And this is an example where our customers, merchants in the Nordics, needed to be able to accept mobile pay because it was now the way that consumers preferred to pay for goods. And we did that through enabling our devices. We've got 30 million of them around the world. We enabled the devices in the Nordics with Bluetooth Low Energy so that we could enable the mobile app application to communicate with our payment devices and accept a form of alternative payment. And today that alternative payment accounts for just over 50% of payments in the Nordics. So I think that's a good example of alternative payments, mobile payments really working. However, it's difficult to find that in certain markets where you have the major banks that are willing to cooperate to support a specific payment method. But I do think that it's a really good case study, and I think we'll see increasingly more of that.
So just how important is the point of sale experience in the overall customer journey?
I think, it's obviously the place, it's the last inch of commerce. So many would say it's the most important because that's where merchants are collecting payment for their goods. It's increasingly important also because it's the one place, it's the main touch point that you have between a merchant and a customer. And it's the one place where you know who that customer is, you have an idea of how frequently they come back, you're able to gain insights from these transactions, and you're able to use those even after they've left the store. So adding intelligence to that process, all while digitizing the experience and making it easier and better for the consumer in a way that's more akin to online, we think is a very big market, and there's a lot that merchants and consumers can gain by improving the capabilities there.
And is there a benefit to merchants beyond making their customers happy?
I think in the case where I mentioned the small merchants, there's an immediate benefit for small merchants. I mean, if you walk in to a small merchant here in London, for example, and you see oftentimes these small merchants either have these kind of like Casio-like cash registers that they purchase for less than £100 that just do basic functions, and that's an easy way to get started, but you lose, closing books at the end of the day is very challenging. The cash drawer may not match what's in the receipts. You're really limited in terms of functionality. And then on the other side, you see some of these merchants that have invested in these integrated point of sale systems that tend to run kind of outdated Windows-based software, which have more capability, but it's a lot more expensive, and they haven't been able to very easily integrate those into other things that they may do. With our Carbon device, we've opened up all of that so that this is no longer just a method for merchants to collect payment for goods. It's also how they run their entire organization. When employees need to check in and check out, they go to the device and they check in. And there's a camera on the device, so you can make sure that it's the actual employee checking in and not their friend checking them in. So it deals with employee management. When inventory levels start to run low, it asks you if you want to order more of a specific product and have it delivered the very next day. Every transaction is automatically uploaded into your accounting software through a partnership that we have with Sage, the #1 accounting software here in the UK. And as a result of that, you don't have to worry about the manual end-of-day processes. Everything is done automatically for you as a small merchant, and even getting to the point where it's reconciling with your bank accounts, which PSD2 is helping with. And that means that small merchants can focus on what they should be focused on, which is creating really great customer experiences and growing their revenue that way, not spending time in the back office trying to figure out why this bank account doesn't equal the balance in that bank account. So we're trying to automate that. We're trying to allow them to manage their business in a box, and I think that's a real benefit that merchants will receive. And by doing all of this on a single platform, the amount of insight and analytics that they can get into their business, into their customers, and the ability to use that insight and market back to their customers and drive more sales and create loyalty, I think increases exponentially.
And how will regulations in Europe affect the payment space?
Well, I think the things ultimately are not nearly as connected as they could be. And I mentioned a moment ago this reconciliation of bank accounts. When your point of sale system is showing one thing, your acquirer may be showing one balance, and your bank account is showing another. Oftentimes, trying to figure out why those three balances are different can be challenging. With things like PSD2, it opens up all of those accounts, and so software providers can very quickly help you resolve some of those reconciliation issues. I think what we're also going to see is the mobile pay example that I gave in the Nordics that required close cooperation between the banks. That's not always an easy thing to do. With PSD2, it is much easier. Now there's an open API for anybody that wants to come up with perhaps a lower cost payment alternative or one where loyalty is embedded. I think, for instance, we may see some of the large retailers take advantage of their own payment methods so that they can reduce their costs and embed loyalty. We've already seen a bit of that in the U.S. with Walmart and Starbucks. PSD2 will allow for that to occur at a faster pace than we've seen in the past.
And how is Verifone preparing for the future?
For us, it's all about opening our platform in a secure way so that we can allow a curated list of application providers that help merchants and consumers as they move forward into this more digital world. We started this path with just last year announcing 7 application partners that had developed applications that run on Verifone's point of sale terminals that helped merchants with loyalty and ratings and analytics and new ways to pay. And we had a huge success with those first 7 partners. And now the list of partners that have developed apps has increased to over 70. And we expect by next month to be at 100 different application providers. So for Verifone, the thing that we have is scale. We have 30 million devices in 150 countries around the world. That gives us the ability to address a large group of application developers that really have to prioritize where they spend their time. With Verifone, they can ensure that the applications they develop are available to the widest possible population of merchants, and they can really make a difference. And so we're spending more time than we ever have with developers and with our customers trying to figure out how we can help solve the needs of merchants and how we can enable the developer community to provide those solutions in a really open way.
Nathan, it was great to speak to you today. Thank you very much for your insights.
Thank you. It was a pleasure.